Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Neil Insull and Matt Crawford.
Welcome to The Tax Factor, the UK's top tax podcast. I am Neil Insull.
And I'm Matt Crawford.
Well, finally, two stalwarts of The Tax Factor brought together for a powerhouse episode.
And that was me thinking that all the others have just gone to lunch and not invited us along.
Oh, really? Lunch? Well, before we get into our targets this week, what is making the tax headlines, Matt?
The Tax Factor headlines.
Well, let's kick off with the big one and the topic that drags back up every single week. It is, of course, the B word, the budget. The Chancellor, Rachel Reeves, has hinted that the upcoming budget might come with a double whammy of both higher taxes and spending cuts. She's admitted that the government's finances are in a tougher shape than she expected this time last year, when she famously promised not to come back with any more borrowing or tax rises. So it looks like everything is on the table, and it's got people really wondering where those tax rises might come or where the axe might fall next.
Well, who would have thought that? So actually, no news this week on that front. We're still no wiser, but we will be talking a little bit about the budget later.
Correct. And over to savings. The Treasury is looking at a potential big change to ISAs. They're thinking of cutting the cash ISA limit from £20,000 to £10,000 to try and push more money into UK shares. The idea to get more investment flowing into British businesses. But it's dividing opinion. Some people think it's a smart policy, and other people think it just punishes the more cautious savers out there.
Like me, Matt. I'm
Like you.
I'm the cautious saver. Okay. So.
And finally, as a headline grabber from the Labour backbenches, a number of MPs have written to the Chancellor calling for the abolition of council tax. Now, they're arguing that the system's outdated and unfair, especially in areas where house prices have soared since the 1990s. And it's a bold move that could really reshape property taxation across England and Wales if it was looked at. I don't personally think that that's a particularly likely one. I think it's probably just too difficult to do a revaluation, but we shall see.
Too difficult, but a worthy statement, a worthy petition, essentially, because I think if there's anything that is so outdated, it is council tax valuation.
It is indeed, yeah.
Crazily outdated. So thanks, Matt. 8 weeks in and still no chocolate VAT story. But having said that, I did hear on the grapevine that maybe Rachel was going to actually exempt all chocolate from VAT, but I hear that's only a whisper.
Very good. I hear that was your own joke, Neil.
Did you like that?
I did.
I'd like a sound effect on that where you had the tumbleweed. Actually,
it was. I would say it was twixt and between fact and joke.
Hey. Do we want to get a chocolate bar into this conversation at every possible moment? I think we should try.
I think we should.
I mean, certainly on to the next topic.
Indeed. Oh dear! Sadly, I've not got a story about genuine bounty to throw in at this juncture. But
God, you'll be taking me to Mars next. But we will be talking a little bit more about that later. But before we do, there's a rare win for the taxpayer that Matt will talk us through in terms of a judicial review case. I'll be talking a little bit more about some of the budget rumours that are around, and in particular what the Institute of Fiscal Studies is saying. I think we have another humorous VAT case to discuss, and a little bit about the expected rise in the sugar levy and what that might do to certain drinks. Matt, over to you.
Thank you very much, Neil. So yes, one of my favourite topics, legitimate expectation and judicial review. This was a rare win for a taxpayer, and just a bit of a reminder for everybody on especially if you're not kind of a direct tax practitioner and don't do some of the administrative law around it. So what is legitimate expectation? Well, it's where you can actually go to not the first tier or upper tribunal for tax purposes, but the administrative court, and say that a public authority, in this case HMRC, has behaved so egregiously it's caused you a loss. What you can't do is you can't simply say that 3 or 4 years ago HMRC HMRC wrote to me and said that I didn't owe tax on this. They now think I do owe tax on it, and I am incredibly disappointed. And therefore, there has been a legitimate expectation. That's not good enough. There has to be an actual genuine loss that you have suffered as a result of information that you have acted on in good faith from the public authority. And in this particular legitimate expectation case, there was a gentleman who was found by HMRC to be non-domiciled back in the year 2000. And it wasn't until 2013, 13 years later, that they then decided actually they thought he didn't have a non-domicile status. In the intervening 13-year period, he'd made a lot of offshore investments, which of course, and claimed the remittance basis. So of course, he was in a place where he potentially made a very large loss as a result of where he put those investments. He couldn't unwind that in the 13 years that he had to do so. He appealed. He applied to the first tier tribunal. He lost the case in front of the first tier tribunal, who said, no, sorry, mate, from the year 2000, we agree with HMRC. You are indeed a fully UK domiciled individual. You've got a domicile of choice in the UK, and therefore you lose on the tax. So what he did is he applied to the administrative court and said, I want to judicially review this. And on paper, they came back and said, can't do that, I'm afraid, because you're out of time, because you have to do it without unreasonable delay, and in any case, within 3 months. And he then asked for a hearing where, very unusually, the judge allowed him a lot longer than that 3-month period. In this case, a large number of years, 5 years or so, since the original decision was made, on the basis that, well, how could they have known that the FTT were going to say this, and that it wouldn't be really in the interests of justice for him not to have at least a go of this, and there was a realistic prospect of success. So we'll await to see that one. Really quite unusual, and this could help an awful lot of people potentially who have had domicile claims in those very, very difficult inquiries, especially if they have made lots of offshore investments. So we will see where.
So which court was
goes.
that? Which court was that held in? That was the.
So that'll be in the High
tier.
Court, in the administrative courts. Yeah, so it's not through the FTT.
Oh, okay.
Yeah.
Interesting. We'll wait to see on that. Thanks, Matt.
Okay.
I was going to have a quick word. I know more about the B word, more about budget, but I just wanted to highlight the Institute of Fiscal Studies Green Budget. So I think we should pay attention quite a lot to the IFS. They've got a lot of good people there. There's a proper, in my view, proper independent think tank on tax policy, tax strategy, and prepared to call out things which are unfair, old, needs reform in the tax system. So they say some sensible things at times, very sensible, and they've come up with what they think the options are for Rachel Reeves in November. There's nothing radical in what they're saying, but they hit on things that we've said before in these podcasts, and they have repeated quite a lot of what the general feeling is that they've basically tied their hands behind their back in terms of increasing the main tax rates, and that will lead to further unfairness in the tax system. And they need to think hard about whether that's the right approach, because this is all politics. They need to think what is right for the tax system, right for taxpayers. And there's more detail in this budget paper, but those are the main. What I get out of that is that this isn't just something where Rachel is going to have to find little pockets of tax and a lot of different places to make up the 30 billion that they're missing. But it's going to lead to continued unfairness in the tax system. And it's about time that reform came. And if a new government can't do it now, which it is now, when can they do it? So I think it raises a lot of questions about the politics around tax policy at the moment, is that no one is brave enough to think about changes which will make it fairer, even at times when they need to raise this amount of money. And in fact, at times when they do need to raise substantial amounts of money from tax, let's do it fairly. Why continue to do it in a way which lets people down, makes poor investment choices, leads to increased unemployment? As we've seen this week, there was an increase in the unemployment rate. And I think, we deserve better. But that's a very personal view, not one that Blick Rothenberg would be prepared to suggest out loud, I don't think. Just on the budget as well, really interesting article on Blick Rothenberg Blick Rothenberg's website this week, produced by Gabby Donald, our head of VAT, in which she talks about the rumours behind a reduction in the VAT registration threshold, which is £90,000 at the moment. She makes some really great arguments about why reducing it is not necessarily great for the economy, and it's certainly not great for small businesses who may be consumer facing, who are going to have to pay increased prices on goods and services from these smaller businesses who are now being brought into the VAT net. Compliance costs around VAT are extremely expensive these days, and it's good for a lot of businesses to stay well clear of it. And it's an interesting article, and I refer everyone to our website to pick that one up. What else have we got, Matt, today?
So also on the VAT front, this
Off
is
again.
my favourite case of the week.
Is it better than my joke or not?
It's not. It's nothing's quite as good as your.
Okay.
Nothing's quite as good as your joke. That was. I know you're keen on those sort of jokes. It's very good. Very good. This is a case called Telemara, and Telemara was a supplier of nitrous oxide, otherwise known as laughing gas, to catering companies. They used the nitrous oxide to put in things like foams and drinks and various different products for restaurants and supermarkets. And when they started trading, they contacted HMRC and said, is the nitrous oxide, is it VAT, is it standard rated or is it zero rated? Telemara assumed that they were zero rated and HMRC didn't contradict them on that. The Revenue then recently issued assessments to the tune of £1.5 million saying that they were actually standard rated, and Telemara appealed to the FTT. And what this case all hinged on was, should it be zero rated because is it a food of a kind used for human consumption? Now, there was no doubt that these were consumed by humans and was designed for that. The question is, was it or was it not food? And the OED says that a food is any nutritious substance that people eat or drink in order to maintain life and growth. And HMRC argued, well, there wasn't any life or growth from the nitrous oxide. I'd potentially argue maybe there's some spiritual growth to be had from NO2 consumption, but probably not more than that. And they also argued that it has no nutritional content, no fat, no protein, no carbohydrate, fiber, or sugar. It can't be eaten on its own, and it's odorless, colourless, tasteless, but when it's mixed with something, it can affect the structure and the texture of the food that it's mixed with. And in order to answer this case, the tribunal looked at, well, there are certain things like bicarbonate of soda, for example, which you probably wouldn't eat on your own, but it's used as a leavening agent and therefore is absolutely a food. So they accept that. On the other hand, however, apparently carbon dioxide used in beer production isn't considered to be a food at all, and because it's just added to make, for example, a foamy head on the beer. Now, my personal view is if you actually scrape that foamy head off, Neil, you can tell me what your view is. I think if you scrape that foamy head off the beer,
yes,
I think it does change the taste of the overall beer experience. But the tribunal disagrees with me on that and says that no, that is just an aesthetic thing, having that foam on top.
Okay, I agree.
You agree?
I don't know. I can't remember having a drink. Would my pint of Tetley's have carbon dioxide pumped into it?
I imagine it probably would do. I imagine it probably would.
Oh,
yeah,
God.
Absolutely.
Okay.
But it's an interesting question. But the FTT in this case, they found that just like the carbon dioxide in beer, the nitrous oxide, it doesn't affect the food itself, only the form of the food, i.e. it kind of foamifies it or makes it larger. And therefore, it is indeed a standard rated item and simply just a food additive. And therefore, the FTT said, no, it's standard rated and that £1.5 million needs to be paid to HMRC.
That's certainly not a laughing matter, is it?
It's absolutely is not. Absolutely not, indeed. So whether that's going to be appealed or not, I don't know. But that was
okay.
That came out
well,
this
that's week. Almost as funny as my chocolate joke. Just one other thing before we close down this podcast, just to mention something else which is being rumoured is an increase in the sugar tax levy. So at the moment, anything above 5 grams of sugar per 100 millilitres in a sugary drink has a levy of tax. Anything above that, and they're talking about reducing it to 4 grams, so 5 grams down to 4 grams. Anyway, Ribena, which is produced, and who would have thought this, by a Japanese drinks giant called Suntory, which make other things as well, whiskey and things. Anyway, so Ribena made by Suntory, that's got 4.5 grams of sugar per 100 millilitres. And what they are saying at Ribena is that this reduction in the threshold at which the levy is paid is going to have to mean they're going to reformulate their menu or their recipe for the drink. And they're saying they have to do that again after doing it back in 2018. They're going to have to do it again. And this is all going to cost a lot of money. And the tax itself would cost another 60 million in terms of Ribena drinkers. The guys who run the business there are basically saying this is not a good idea and is going to stymie further investment. And who wants to do that? And in fact, what they also said is that who will notice the difference between 5 grams and 4 grams? You know, I think someone said it was like half a grape or something in a litre of drink. So I think even in something like the sugar drinks levy, there's still businesses who will feel the pain on attempts to increase the tax take essentially from these different types of taxes. So I've just added that in as an example of something we don't see too often, but something again will affect consumers and the businesses to the extent that it actually stymies the investment of those business.
Yeah, no, it really is a current issue for that business.
Blick Rothenberg, celebrating 80 years.
Well, I think that's all we've got time for this week. Thanks to Matt for co-presenting this week.
If you want to stay ahead of the latest tax news and insights, don't forget you can head over to the Blick Rothenberg website, where you can also sign up for updates on key topics like the upcoming budget.
Next week, there is a special episode of the Tax Fact, even though I thought this was quite special itself. Anyway, the special episode is with the tax goddess Heather Self, and she'll be talking to Max Schofield, who's from Devereux Chambers. Max is a specialist indirect tax barrister and a VAT litigator who has actually dealt with some of the VAT cases we've covered on the Tax Factor over the years. So I think that will be essential listening, particularly as Heather said I was a better presenter than Mr. Nimesh. So everyone should listen to Heather.
Fantastic. Thank you, Neil. If you enjoyed this podcast, please subscribe and give us a rating or review. But from us, it's goodbye and have a great weekend.
Goodbye.
That's the Tax Factor. Since launching in August 2023, we've become the UK's top tax podcast in the UK podcast chart. Join us every Friday for expert insight on the latest tax news. Subscribe on your preferred podcast platform or listen direct on the Blick Rothenberg website, where you can also find the latest updates and analysis. The Tax Factor from Blick Rothenberg. Copyright 2025.